Hey everyone, welcome back to the channel. My name is Aaron, and today we're diving into another monthly dividend-paying stock. This time, we'll be reviewing and analyzing Pembina Pipeline Corporation, ticker PBA. In this video, we'll go over its dividend details, financials, and options strategies, helping you determine if this stock is a solid addition to your portfolio. If you enjoy this content and want to see more stock analysis videos, don't forget to hit that like and subscribe button below. It really helps out the channel. Now let's get started. Pembina Pipeline Corporation is a leading provider of transportation and midstream services for the energy industry. The company operates through three main segments. Pipelines. This segment transports conventional oil sands, heavy oil, and natural gas across North America. Pembina's network has a transportation capacity of 3.1 million barrels of oil equivalent per day, along with 11 million barrels of ground storage and 145,000 barrels per day of rail terminal capacity. Facilities. This segment includes infrastructure for natural gas processing, storage, and fractionation. It provides customers with NGLs, ethane, propane, butane, and condensate, and boasts 354,000 barrels per day of fractionation capacity and 21 million barrels of cavern storage. Marketing and new ventures. This division buys and sells hydrocarbons, primarily from Western Canada, and seeks new business opportunities in the energy space. Founded in 1954 and headquartered in Calgary, Canada, Pembina employs over 10,600 people.
Let's take a quick look at how Pembina Pipeline has performed over different timeframes. 1-year growth, plus 55.51%. 6-month growth, plus 35.94%. 1-month change, minus 1.17%. 5-day change, plus 1.1%. 1-day change, plus 0.64%. One of the most attractive aspects of Pembina Pipeline is its monthly dividend payouts. Here are the key details. Annual dividend, $1.91 per share. Monthly payout, 17 cents per share. Dividend yield, 6.47%. 5-year dividend growth rate, 6.61%. Consecutive dividend increases, 5 years. Ex-dividend date, typically around 22nd, 25th of the previous month. Payout date, typically around 15th of the following month. For example, to qualify for the April dividend payout, paid in May, you need to own shares by April 22nd, 23rd. Now, let's dive into Pembina's financials based on their 2020 earnings report. All values in millions. Total revenue, 2020, $6.202 billion, down 14% from $7.230 billion in 2019. Infrastructure and services revenue, $2.997 billion, up 24% from 2019. Product sales revenue, $3.205 billion, down 33% from 2019. Net revenue, $3.444 billion, up 10% year-over-year. Adjusted gross profit, $2.322 billion, down 5% from 2019. Gross profit, $2.008 billion, down 18% year-over-year. Net earnings, 2020, $316 million loss, compared to $1.507 billion profit in 2019, a 121% decrease. Earnings per share, EPS, 86 cents per share, compared to $2.69 per share in 2019. Operating cash flow, $2.252 billion, down 11% from 2019. Capital investments, $1.029 billion, down 37% from 2019. Adjusted EBITDA, $3.281 billion, up 7% year-over-year. If you're interested in options, Pembina offers some unique opportunities due to its monthly dividends. Here are 2 potential strategies. Covered calls. If you own 100 shares, you can sell a call option for extra income. For example, the May 21st expiration has a $30 strike price with a $65 premium. However, if the stock price rises above $30 before the ex-dividend date, your shares might get called away, causing you to miss the dividend payout. Cash secured puts. You can sell puts at a lower strike price to potentially buy shares at a discount. For example, $22.50 strike pays $10 per contract. If assigned, you'll own shares at $22.40, a 25% discount from the current price. As of January 19, 2025, Pembina Pipeline Corporation's PBA projected discounted cash flow, DCF intrinsic value, was $35.35. These strategies allow you to generate additional income while owning the stock or waiting for a lower entry point. Pembina Pipeline, PBA, is a solid monthly dividend stock with a strong infrastructure and consistent payout history. While 2020 saw revenue declines due to market conditions, Pembina has shown resilience with strong cash flows and a growing dividend. All right, so before we wrap up, let's take a quick break and talk about the stock in a more casual way. Investing in dividend stocks is a great way to build passive income, but it's important to make sure the company is financially stable. Pembina Pipeline has a solid track record, but as we've seen, they did face some revenue declines in 2020. The big question is whether they can bounce back strong in the coming years. So here's the breakdown. Here are the advantages. Reliable monthly dividend payments, making it a great choice for income-focused investors. Well-established infrastructure and strong cash flow generation. A long-standing operational history with decades of experience. Here's the challenges. Susceptibility to market volatility, particularly influenced by fluctuations in oil and gas prices. Revenue decline observed in 2020 due to market conditions. Unless you're looking for a long-term investment with consistent dividends, we wouldn't recommend adding this stock to your portfolio right now. If you found this video helpful, check out my playlist of other monthly dividend stock reviews right here. And don't forget to hit like and subscribe for more content like this. Thanks for watching, and have a great day.